Healthy morning to everyone. Hi students, I hope you all be safe at your home. This is Dr.A.Kavitha, Assistant Professor, Department of Business Administration, Janaki Ammal College, Sivakasi. This video content is concerned with a very interesting subject of yourself, that is financial management. Actually, it is coming under the purview of your 5th semester. Let me discuss the conceptual framework of this subject in forthcoming presentation. A good beginning leads a satisfied ending. Yes, students, it is the time to adhere the head contents of syllabus with reference to our financial management subject. Unit 1, Introduction to Financial Management. Unit 2, Capitalization. Unit 3, Current Assets Management. Unit 4, Investment Decision. And Unit 5, Funds Flow Analysis. Let me initiate our discussion with the first unit, Introduction to Financial Management. Finance function. Actually, many interpretations have been given by financial analysts and economists. Here you are adhering the interpretations given by two persons. In the point of view of F.W. Pace, finance function is explained in the form of provision of money. Whenever it is being required, it should be created. In such a way, it is explained here. And in the point of view of Dougal, finance function is correlated with the managerial functions, which have already been learned by ourselves in Principles of Management subject in first semester itself, from planning up to the controlling. So here planning of funds and controlling of the raised funds are being explained. Finance decisions, which can be actually segregated into three types. First one is the investment decision. It is related with effective utilization of funds. That is, for each and every concern, they have already raised the funds on the basis of their requirements. The raised funds should be utilized effectively. So it is related with economic or effective utilization of funds. Second one is the financing decisions. So it is related with how the funds can be raised by following the sources. There are so many sources like issue of shares, debentures, etc. By following any one of the source or otherwise a combination of source, the concern may raise the funds. So it is concerned with raising of funds on the basis of the concern's requirements. Third one is the dividend decision. In case of public concern, there may be a necessity to pay dividend to the shareholders. In such a case, this particular type is occupying its role as very important. So dividend decision is concerned with payment of adequate quantum of dividend to the shareholders of the company. Summing up, first one, the investment decision correlates with effective utilization of funds. Second one, financing decision is concerned with raising of the funds required for the firm. Third one, dividend decision is concerned with deciding of payment of dividend to the shareholders. Okay students, till now we have crossed over the very basic content of finance function and finance decision. Let me enter into the field of financial management. Whenever we enter into the new field, we automatically learnt three things. First one is what it is. Second one is how it has been interpreted. Third one is why it is to be studied. Let me go through the basic, that is a meaning of financial management here. Students, here two aspects you need to keep in your mind, that is administrative functions and effective utilization of funds. If you are coordinating these 2 points together, automatically you will get or acquire the meaning of financial management. Yes students, this is the second part. Already I have told you, no? how financial management can be interpreted. I have received many definitions. Here I have produced few definitions for your easy learning. Okay, let me discuss. According to Howard and Upton, how it can be interpreted? Application of managerial principles to the area of financial decision making. What it is? How managerial principles can be applied to decide about financial issues in a particular entity. In second definition, according to Weston and Brigham, financial management subjects to coordinating two things. What it is? Individual motives with the enterprise goals. Here, conformly you can remember Henry Fayol's 14 principles. Out of those principles, one principle, subordination of individual interest towards the organizational interest. That similarity, the resemblance has been produced here by Weston and Brigham. What it is? If an organization meets individual goals, automatically company goals will be accomplished. For example, if an organization provides adequate financial rewards to the individuals on the basis of their performance, conformly, organizational financial requirements will be achieved. That is the point. Ultimate point is produced in the form of definitions. Okay, students, this is the final definition in the point of view of Joseph and Massey. According to themselves, financial management is considered as an operational activity for raising the funds and utilizing the funds effectively. Here, one thing they have interpreted, that is, financial management is an activity through which two functions should be carried out. That is, how the funds can be raised and how the funds can be utilized for effective work. That is, for needed operations. That is the thing you have to take as a gist out of this particular definitions. Okay, usually we took at least 3 definitions for getting intro about a particular subject, no? Here you are learning 3 definitions, but you can choose any one of the definitions out of these 3 which you found as easier enough to follow. Yes, of course, students. This is the third part. We need to remember why it is to be studied. Importance of financial management. It can also be considered as a significance, need, necessity, or otherwise, why do business entities follow financial management in their concern likewise. Okay guys, let me shift to the content of significance of financial management. Here I am going to discuss key points associated with the significance of financial management. If you are taking a particular deed, each and every activity can be initiated with good planning, no? Here significance can also be initiated with proper planning. So first thing is proper planning about the generation of funds. So for a business entity, there is a necessity to plan about quantum of funds required, how they are going to raise the funds. So that is the proper planning about generation of funds. Second one is forecasting about the requirements. So with the help of proper planning, they can also forecast how much quantum of funds need to be raised or need to be retained for future. Third one is meeting various financial obligations. If you are taking a particular entity, it may possess its own liability to pay loans or to meet some liabilities, particularly the financial issues, regarding the financial issues. As a fourth one, we can take as a employability of funds. What it is, how does a particular concern employ its funds for profit planning, capital spending, for measuring the cost, etc. In case of profit planning, it should decide about allocation of funds for retained earnings as well as distribution of dividend to the shareholders, particularly in case of public limited concern. In case of capital spending, it should also decide about how much funds can be employed on the basis of its expenditure pattern. Likewise, measuring the cost incurred for purchasing raw material or maintaining the finished outlet in the warehouses, etc. Next one, controlling. Controlling of inventories. Not only the inventories, accounts receivables and cash. How it can be explained? Regarding controlling of inventories, it should be taken into account both the periods, that is pre-production as well as post-production. In case of pre-production, it should also be kept in mind maintenance of stock or otherwise maintenance of inventories required for initializing or commencing the production work. After the production, that is during post production, it should also decide about maintenance of finished outlet with proper quality, with adequate quality until it reached to the hands of the consumers. Last point is affordability. Here the concern should also match its input with the output. What it is, on the basis of its input of funds, it should also decide about the quantum of finished outlet. Summing up, proper planning, forecasting, meeting financial obligations, employing of funds, controlling and affordability. These are all the points you have to keep in your mind as key points with reference to the significance of financial management. Yes, guys, we are at the concluding part of our discussion. Shortly, we have discussed the concepts like finance function, finance decision, financial management, and its significance. Let me share frequently asked questions with reference to this framework. Questions like analyze the concept of finance function, comment on finance function, illustrate finance decision, contrast one type of decision from another one type, examine the concept of financial management, define financial management, why financial management need to be followed by a business entity, or otherwise need of financial management, why it is to be followed by a particular entity for making financial decisions, etc. can be expected as questions. Students, I hope you are having thorough understanding about the content we have discussed till now. If you are having any sort of clarifications, please keep in touch with your queries. You are almost welcome. I thank everyone for your patience, hearing and listening throughout the content I have presented. Be energetic, be healthy and be productive at your home, which ensures your family's welfare during this pandemic. Be happy and be safe. I thank everyone for your support and assistance.